You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the Flowmaster Schwartz from SIBO. The Option Block is brought to you by SIBO. When it comes to trading volatility, trust SIBO, the creator of the VIX Index, for in-depth and relevant information. SIBO's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for the Thursday edition of your bi-weekly options extravaganza known around the globe as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever scintillating, at least we tend to think so, Options Insider Radio Network. Hope you all are having a good trading week out there. Remember, if you do like what you hear on the old on-demand side, then, of course, keep throwing some stars, whether it's on the OB feed, the network feed, any other show you listen to maybe that you prefer. Hey, if you prefer something else, who are we to judge out there? As long as it's on the network, we don't care. And then, of course, if you want to go above and beyond, you want to join us. We had a great pro Q&A with Mr. Scott Nations, the creator of VolQ, this week in the hot seat. Do you want to hear what he really had to say about things like one-day VIX and zero-day and all that fun? Spoiler alert, he does not hold back. He is not reticent in sharing his opinion. Then check that out, theoptionsinsider.com/pro. That'll also get you into the cool kids club so you can join us for Options Oddities tomorrow after Vol Views. Check out all the other nearly 200, probably more than that now, episodes of exclusive pro content. You guys are also getting early access to all the OIC stuff we recorded. That's already hitting the pro feed. That'll hit the on-demand side down the road. All that fun and a whole bunch more. Theoptionsinsider.com/pro is the place to go as we go around the horn and see who's joining us on the old Thursday edition of the old OB. First, we go out to the quiet, the sleepy hamlet of St. Charles, where I can say they do make delicious gyros and lemonade. Yes, St. Charles, we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how go your forays into delicious gyros and lemonade, sir?
I haven't had a gyro in a while, but you're getting me craving one. Maybe I'll make the drive over to Skippy's here after the show.
I half expected you to have a mouthful of gyro as I dialed you today, sir. So you never know. You never know what's going on in the crazy paradise known as St. Charles. I mean, a Costco, the Kane County Fairgrounds, and a Skippy's. What more do you need in life? Perhaps, listeners, you need the dank solitude, the foreboding mists of the shores of Maine. Well, if that's the case, then the Rock Lobster will keep you company. Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. How go the dark, stormy, and foreboding shores of Maine, sir?
You know what our clam pirates are today?
Are you shooting at them as we speak?
They're loons. They're these kind of white stork-like birds.
Oh,
eating the clams.
Nature's clam pirates. I see.
And it's actually sunny and quite nice today. There's the stormy shores. There's birds and sunshine, and it was very, very odd.
Have you recovered from your tumultuous tour of the city, big city life, sir?
Yeah, I think I gained 3 pounds in that week, and I lost it all back in 4 days when I got home.
Well, a pound of it was that steak at Gibson's. That was pretty.
Oh, my gosh. Well, there was this. Let's just go through the list of food. Steak at Gibson's, Giordano's Pizza, Portillo's, Rosebud, Carson's. What else can you say?
You did all the Chicago favorites.
I'm only there for a week, and it's taken me a week to recover, but it was a lovely time had by all.
I don't even know where Carson's is anymore. They moved. I don't know where their new spot
Yeah,
is.
there's one in Northbrook.
Oh, way out there. Oh, okay.
Yeah,
all right.
yeah.
That's what I was going to say. Where'd you find a Carson's? That's old school.
Yeah, I stayed with a friend on the way in and on the way out, an old friend from my Chicago trading days there. So it was quite a nice time.
I miss the old Carson's downtown. I need to get back downtown again. Delicious ribs were had by all at Carson's, listeners. And you know what? Options Fun will be had by all because it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, let's get to it. A little bit of the old what's trading out there. Another one of those kind of split markets on the day. The S&P hanging out off about 0.25%, so slightly in the red. The Dow firmly in the red, off about 0.75%, getting dragged down by the Diz and perhaps a few others. Disney screwing the pooch with earnings last night. We'll get to all that fun in a little bit. Tech-heavy NASDAQ, though, tech stocks, they can't go down. So tech-heavy NASDAQ is up about 0.2%. So very much, depends where you hang your hat in the market type of day out there for you listeners. All this means there hasn't been a heck of a lot of evolution in the markets and in the vol space from our Monday show. VIX, when we kicked off the show, a little bit north of the 17 handle, about 1720, puts it down about 3 points from where it was, actually 0.3 of a point, I should say, from where it was this time on Monday's show. VVIX, vol, get a little frothier though, back up a little bit, up to about a 99. So threatening to break back into that triple digit level. A VXX 38 down about 0.75 of a point. UVXY 360 literally unched, which, what do you expect? This thing can't just go to zero overnight. So it's just going to hang out around this level for a while. Again, adding fuel to the argument that they probably should reverse split this thing. SVIX 1890 up about 0.3 of a point. UVIX at an 11 even down about 0.2 of a point. And Vol Q, aka the at the money vol of the NASDAQ 100, aka the product that our buddy on the Pro Q&A there, Mrs. Scott Nations, created. Vol Q 18 even when we kicked off the show, down about 0.5 point. So been a lot of treading of water for most of this week, still hanging out ever so slightly north of that 4,100 level. We seem to be glued these days between 4,100 and 41.5. If we get too far outside that range, we eventually snap back in, and we're hanging back out there today. We'll start in the land of delicious gyros. Mr. Uncle Mike, sir, what is catching your eye out there in a somewhat sleepy market out there today, sir?
Well, I'm looking at it. CPI was the news today. I guess it's not quite as inflationary as they expected, I believe. So we have that working in our favor for the bulls. But with what's going on with everything, it's going to be about the Fed. But some other things from a macro level with which we're looking at. Now, regardless of your political affiliations, Donald Trump is very much back in the news right now. And that's going to be a big factor in how things are happening. Whatever your political affiliations are, I know this is a very non-political program, which is one of the things that makes this the best program on the planet, in my opinion, because of that. But you do have to keep keep looking as to what is going on from the macro level as to how policies can change and how it can affect the market. And the fact of the matter is that we're getting into political season again. And we are roughly in November of 24, we're going to have another election again. And as of right now, we are about 18 months away from that. And so whether you like it or not, there's going to be a lot of politicking going on in the coming months. So with the CNN interview with former President Trump, it's not really affecting the market yet, but you're going to be seeing a lot more of them, and you're going to be seeing a lot more of a heated political climate over the next few months. So you need, as an investor and a trader, you need to be prepared for that as to how to trade that. One of the things that I absolutely loved about the Trump administration before COVID was that he would say, hey, we're going to raise the tariffs on China. And then the markets would crash. And then, not crash, but they would go down significantly. And what you could do at that point, it was almost like clockwork. You could sell put spreads, or you could do something bullish. And then when Trump would see the market go down, he'd say, you know what, we're not going to ease the tariffs we're going to ease the tariffs. Or I'm sorry, at first he would say he's going to have higher tariffs on China, market would go down, and then you could buy that dip, and they'd say because he does not want to have a lower stock market, he would then say, I guess we're not going to really have that high of tariffs, and the market would go up. It was probably one of my favorite trades in my close to 20 years of doing this, quite frankly. So things like that are what you're going to have to be aware of. I believe that what's holding back this market from having a really good year right now are regional banks. And the reason with which I say that is that everyone's talking about AI right now. And regardless of what happens with it, I think that, are you going to bet on Google to win in the AI war, Microsoft, Apple, or Facebook, or Meta, whoever? Who knows? I think that's it's like a giant horse race with that. But someone will come out on top, and other people are going to come out pretty close to it, I think. They're all going to have a use for it. I don't know if it's going to be a big moneymaker for the individual companies, but I do think it will change the world at some stage. That'll be the next world-changing thing, like the smartphone was. But with that, as you're going through that, I believe that we need to be aware of that and just have an understanding of how it's working, what's happening with it, because that's something that it's borderline creepy, in my opinion. And we do have to keep an eye on that. Combine that with the political climate, and we do have a Fed that's scared of inflation right now. So on this, we are getting news saying that inflation might be tapering down a little bit, but I still think we're a ways to go from where the Fed wants it to be, in that no president wants to be the president when the market tanks, and no Fed president wants to be in charge of the Fed when we have out of control inflation. If we have a down market, if I'm Powell, I can just look you in the eye and say, hey, it ain't my fault. But if we have inflation, that's kind of viewed as his thing. And he really does not have any political motivation to be the one to have the economy booming or whatever, because he can just blame that on the politicians if it's not. So I think that the Fed is still going to do a little bit more interest rate raising in the near future. I could be wrong. Whether it's warranted or not, we could debate that, but we still have to be aware of that. So I guess in this today in the market, it's really not moving a lot, or at least the S&P, it's down 12 points. But I want to take this opportunity to just give all of our listeners a chance to just speak the message that we really have to be prepared for this upcoming political climate that is going to be coming back. I mean, we are going to be going back to the 2015, 2016 days to an extent, to where there is going to be a big divide, and remarks from Trump or Biden or Pelosi or Schumer or whoever, that's going to start becoming market movers again. And so that is what I'm seeing, folks.
I don't think any of us wants a return of the early days of the Trump administration when VIX dropped to 12 and then slowly withered to 9 and the markets died. Just from a purely financial markets perspective, I don't think anyone in the options world wants a repeat of 2017, a very bleak year from an overall options and indeed volatility perspective. No one, literally no one on the network listeners had in their crystal ball that when Trump rolled into office, volatility would die. Everyone thought it would be completely the opposite. And yet, look what we had there in the year that was 2017. A black hole of options volume, a black hole of her volatility. A year no one wants to repeat anytime soon. Not when we're hitting 1 billion contracts a month now and putting up record volume all the time. No one wants a repeat of that. Let's go on out now to the rockingest of lobsters, Mr. Rock Lobster, sir. Speaking of which, as you were talking, I happened to just be glancing at some of the CME FedWatch tools. You want to check out all the great tools over there at CME, listeners. You know where to go, cmegroup.com. Click on FedWatch if you want. You can also go, of course, to our TWIFO report, which we put out for you for free because we like you folks over there. But right now, FedWatch pricing in a nearly 50% probability of a rate cut as early as July. So today's numbers are already being felt out there in the FedWatch tool and in the markets out there. So intriguing stuff. Mr. Rock Lobster, sir, what's your take on this perhaps deceptively sleepy market, sir?
I believe on this show, it was you and I and TOSAW. We all marveled that who would have thought that Donald Trump would be the single-digit VIX president?
Literally no one thought that. There's no one on the planet thought that.
No doubt.
And then all heck-a-roll broke
He went from 9 to 40.
And then he's like, okay, we're gonna, they got, I guess we were feasting on those tax cuts, which I have to say, it would have been nice if they were accompanied by spending cuts as well. But apparently, Congress did not get that half of the message. We got the tax cuts, but no spending cuts. But anyway, I blame it on everybody. I blame everybody. So I think we have a couple of things here. So I will mention. All right. So when was the last time, Mr. Longo, and even Mr. TOSAW, when was the last time we had ridiculous contango in a summer cycle? I'm taking because we're talking Trump, so we're going down memory lane here a little bit.
I guess it is in May, so it's sell in May and go away season. But yeah, it's been a while since we've seen. I want to say maybe some stuff popped off in like late summer of 2021, but outside of that, like heading into the summer, it's been a while.
So I think, and I need Russell because I missed him on Friday, but I need him here for this one. But right now we have almost $4 of contango in the June contract. And normally, this shows a big disparity between the short-term vols and the back-month vols. So the forward vols pop up. And the last time we had this, remember when that SoftBank whale came in and just bought up all the Qs? Do you remember that? I'm going to say July, August 2020. Remember when those Q stocks went straight up?
Good times for all.
Good times for all. They blew up the vol, blew up all the upside, and then they hit the exit, and the Qs dropped like 12%. And I believe QQQ is up 25% since the beginning of the year right now. Now that's a pretty big number. If you look at the QQQE, which is the Q equal weighted index, basically giving Apple and Google and everybody the same weighting as all the other stocks instead of market cap weighting. That is unchanged since the end of January. So, I mean, once again, we have everybody's heading to the safety of the relatively few stocks. And you could argue, are they worth it? Are they not worth it? And I think this earnings cycle, the story of this earnings cycle, since it's not terrible, we're going to take the stock up. I believe that was the phrase. I don't know if anybody bandied it about or not, but that's, Apple was up pretty good. Google's up a little bit. Microsoft was up huge and they did have revenue growth though. They did have revenue growth. It was extremely slow, much lower than, historic numbers. And still the stock is, it's not too far off its all-time highs. Amazon, no revenue growth, and the stock is going up. So you're looking at that stuff, and you're like, hey, wait a minute here. This is a little nutty, right? Microsoft is approaching, its 2021 highs. So, okay, their people are buying these stocks, and then you look at what TOSAW said. Like, look at Bank of America. Look at JP Morgan. I mean, Bank of America is down 50% from last year. That's a pretty big drop, and all the money is piling. So my question is how long can money just go into, the top stocks plus Nvidia, maybe Chipotle, a couple other ones that, everybody likes, and just like run hightail out of the banking sector? Because that's, the Fed made those banks buy all those bonds, and then they shoved all the bonds out of them at 0% interest rate, and then they jacked the rates up to screw them. So, we've kind of on the show said, a lot of these problems have been self-created, and I don't know how the banks are going to get out. So I guess they just hold the securities to maturity, and then they roll them when it's time. And I believe that's why the Fed basically said, hey, you can swap your bonds for cash if you need them at par. And it's A-OK, which is not normally how the market function works. So that was March. Now we're here. Now we're through April. The month of April went by lickety split here in Maine. And we're looking at the beginning of May. And the Qs are up huge for the year. Like huge year. Because I just remember looking at, I swear I blinked and Q was like 265, and now it's back to 325. So you have to wonder here, how long can this keep going on? So from a vol point of view, it does. When there's this much contango in the market, historically, it's not great for SPX. It's not great for longs in the short term. So I would say, hey, this is the condition. I don't know when it ends. When does everybody bail on the Q stocks and start buying banks again? And as you guys just said, FedWatch says 50% that they cut. I don't see that they cut this year at all. I don't see how that's possible because it would just make them look dopey.
Fed Fund says pshaw to you. Imagine if they cut in July. Like, what have we been doing? What is going on?
It would be like, it would be a funky circus. Can I say gypsy circus? I don't know. Can we say
then the inmates are running the asylum at that point. If they cut in July.
That's madness, right? Total madness. So,
but 50%, I mean, this is not a frivolous measure, right? This is head scratching sometimes.
So so this is where we are. I think we do have a stock pickers market. I don't own very much of all those big tech stocks because I got rid of them, some in 2021 and some in 2022. I still own a little of them, but it's very, very small relative to what they used to be.
I put all my money in Oatly and Charles Schwab. Are you saying that was a bad deal? That was a bad trade, sir?
and that's like two stocks where at least Oatly I can see because they just haven't figured out how to make money. But Schwab, like materially, where's the problem, right? So it's either an opportunity and you just decide, okay. I am more of like selling put spreads in there, like buying calls. I think is like you want to think that it's going to be great, but I don't know. It sure hasn't been lately. So I think it might be a good risk reversal type stock. Sell some put spread and buy some upside calls. But again, that's not investment advice, but it's it sure looks enticing. And the reality is, if we stop raising rates, does that help? Does that help stocks? And I think yes. Now the question is, does that get people to buy something else besides the top 10 market cap stocks in the nation? And that, again, I don't have an answer for that question, but I would assume so. I would assume you start seeing some interest in banks and oils and all that kind of stuff. And, 3M is $100 and it pays, I don't know, it's an insane dividend at this point. So it's clear that the market doesn't care about any kind of value. Yeah. So 3M is yielding 6% a year, $6. For me, like somebody like I'm kind of a stocks with a value guy. I like the S&P 500. I like value stocks. I like dividend paying stocks. So I'm going to buy a little more of it. I just figure it'll work out. But you clearly there's money going into one place and it ain't going anywhere else. And when this great unwind happens, similar to this, maybe the summer of 2020, for the listeners, go back and look at, like June, July, August 2020 and look at that story there. And what I will say, though, is that the Qs did end up the year recovering that loss totally. And it would not surprise me if, things looked a little rosier from the growth perspective, that even if the Qs sold off 10 or 15% right now, we're only giving up half the year, that they bounce back. And that's my story right now, and I'm sticking to it.
As you were talking, I was putting together a little flash poll for our audience, just seeing what they think about all this Fed Watch madness. It's going to go live in a second, listeners, but quite simply, Fed Watch is showing a nearly 50% probability of a rate cut as early as July. Do you think that will actually happen? And give you two choices, obviously, yes, rate cut in July, or no. That is insane. It's going to be a flash poll. It's going to be a quick one. We'll leave it open for a couple hours, though, so you folks on the podcast will have a chance to play along as well. We'll get your results a little bit later here in the show, but I happen to be on the no, that's insane front, but hey, to each their own there. It just sounds like madness that we're raising, we're cutting. Not even next year, just in a couple of months. But insane. The Fed, obviously, highly subjective, highly politicized topic. Let's go on to some things that are a little bit more objective, like the volume numbers coming out today. And it's kind of a weird day. I said it was sleepy, but it's actually, when you start digging into it, not quite as sleepy as it might appear. VIX, for example, doing 457,000 contracts already, so closing in on 500,000 contracts. That's not nothing. The ADV is 788. Seems like it's going to hit it today. SPY, again, a day that ends in Y. You can't stop SPY. 4.75 million contracts. ADV 8.1, so it's well on its way to hitting that. The S, 1.3 million. The ADV 2.6 million, so closing in on halfway there. Small caps, IWM 431,000. Their ADV has been glued to 1 million for quite some time, and they seem to be able to maintain it. So intriguing stuff. And the Q is already at 2 million. The ADV is only 2.75 million. That has come in a little bit. They used to be a little bit north of 3 million. So it seems like they're on pace to blow past that today. But the real story is definitely in single names, listeners. I was saying it's a sleepy day, but on the single name front, we are seeing some numbers, listeners. Right now, it costs you 293,000 contracts to break into our top 10. That's more along the lines of what I'm looking for in an earnings season, not this $180, 200, 205 kind of thing we've been seeing for a while. Kind of these sleepy days, closing in on 300,000 contracts to break into our top 10. That's a decently active day, listeners. That gets us all the way to Alibaba, everyone's favorite name, a ticker symbol BABA, of course. Nice pop for them today. So I guess China is back on. China, of course, a very on-again, off-again market. Right now, apparently, it's on today. Alibaba, one of the big bellwethers for it. 88 and about 88.13, up 5.17 or 6.25%. So good news out there for good old Alibaba. And again, already closing in on nearly 300,000 contracts. Number 9 also closing in on it. It's our old friend, the artist formerly known as Facebook. 297,000 contracts for them. Facebook up 430 right now, 237 and about a third. Kind of getting back to what the Rock Lobster was saying. So much of this rally, and again, indicated by how the indexes are shaping up again today. NASDAQ up, everything else red. It just goes to show how much of this is really concentrated in a handful of names. It's like tech is just strapped the rest of the market on its back, and it's just going surging forth on a rocket ride, and everything else is kind of just getting dragged along. You start digging through the weeds a little bit more. Things are perhaps not all upside, not all AI all the time, but Meta looking good today, up about 4 1/3. Number 8, Chip Zone coming a little bit early and also pretty robust. Number 8, we're already at 425,000. Just one of our last shows within the last week. It took us all the way up to, I think, number 3 or something to get up to that level of volume. So today, definitely a sneaky busy day. AMD giving up a little bit of the ghost today, off about 15 cents. So not a huge amount, but enough for 425,000 contracts, trading right around 96.85 or so right now. Number 7, the aforementioned Diz. Man, they came for it overnight. It was just, I looked at it just yesterday. It was 103. We're close to it. I think it was 101 was where it closed, but it was trading 103 within the last couple of sessions. And now it's back below 93, 92 and a quarter, off nearly 9 handles or almost 9%. Just today, you know, Disney's been a weird one to watch. Obviously, they had the CEO shakeup, but also during the pandemic, you know, when most of their divisions were closed or on hold, the parks were closed, they weren't rolling out any new movies, there were no live sports, so ESPN was flagging, and yet the stock was rocketing to the moon on the strength of this nascent streaming platform, so it seemed like they were all in on the streaming side. Now the parks are banging, movies starting to come back out again, everything else, and sports obviously back with a vengeance, and yet the streaming platform not doing well, and so that's dragging everything back down. I guess if you're all in, you live by the sword, you die by the sword, and right now they are dying by it. So back down below 93 bucks, 92 and a third. So Iger struggling to right the ship out there. Obviously, all this back and forth with DeSantis in Florida is not helping. They're suing him, he's suing them. Now they're expanding the lawsuit. It's just a disaster. So all of that, never good for the outlook for a company that is so linked to an area like Disney is to Florida. Number 6, the other half of the chip zone, also coming early. This is NVIDIA, the other name on everyone's lips out there in the AI wars. People seem to be talking really about 3 big names in the tech side for AI. Of course, it's Google. Of course, it's Microsoft, but also NVIDIA out there. Again, number 6 today, 498,000 contracts. NVIDIA apparently can go down. That is theoretically and actually possible. 3 3/4 is how much is selling off today, off about $1 and a third, trading right around 285 and about a nickel or so out there. So a little bit of red on the screen today for NVIDIA, good for nearly 500,000 contracts then. Then we get to the Googs. Man, the Goog lighting it up. First, we have good old Alphabet Class C, a.k.a. Goog, 554,000 contracts. So, you know, it's a banger day when one part of the Alphabet flagship is already putting up 500,000 contracts. 117.60, up about 5 1/3. Of course, the big Google I.O. event was yesterday. People have been waiting for a long time. There's been rumors of this folding Pixel phone. We finally saw it yesterday. So apparently the market is liking what it's seeing out there. With that, obviously, there's other developments, other hardware, other software developments, everything else like that. Also, of course, anytime you talk AI, the market likes it. And they have AI snapshots over there in Google land. So that also making the market happy, up 5 1/4, 117.5. And just how much of this rally? Look at this. In the last month, it's up, looks like about 11%. And really, since the nadir right around March 10th of 91 bucks, it has done nothing but go straight up, I should say. A lot of that on the heels of just all things AI. Number 4. Yes, I said number 4, listeners. When's the last time I said that? Apple coming in at number 4, 704,000 contracts, 173.60, up about 3 cents. So kind of an unched day for Apple. Still flirting, just kissing that all-time high there, listeners out there. Just a couple of points shy of it right now. But, you know, it's a day, market doesn't like it when Apple is red. So we'll see if it could keep it green today, even though it seems like it's trying to drag it back down. Number 3, the Amazonians. 780,000 contracts. So Amazon even beating Apple today. That's kind of interesting. Up nearly $3, about $2.90, trading 113.10 right now. So Amazon getting a little bit of upside here. Amazon not really bandied about as much in the AI wars, even though they are trying to change that. Maybe some of that lift today is on some of the forays out there, but good little run for Amazon today nonetheless. Then number 2. Yes, number 2. You know, it's a weird day when Apple's number 4, listeners, and Tesla is number 2. Someone has stolen the crown from Tesla today. Tesla, 938,000 contracts, up about 60 cents, trading 169.10 or so. The big dog, get this, listeners. I was talking about Google I.O. and all the developments coming out of that. Well, the old Alphabet mothership, Alphabet Class A, taking the top spot today, 965,000. So you add in Goog and Google, you're about 1.5 million contracts right there, listeners. So, man, just even the whiff, the hint of anything new with AI is just driving paper on top of course, the folding phones and everything else. But just craziness. 117 even for Alphabet Class A, up 5.25 or 4.7%. Again, good for 965,000 contracts. So just compare and contrast this to the top 10s we've said from, let's say, a few sessions ago, and you would see just how much heavier things are right now. We had big earnings this week as well. Palantir blowing the doors off, Disney screwing the pooch. Lots of big names. We got to get into some of the oddities. So let's go to a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, let's get weird. Let's get wild. Let's talk a little bit of the old odd block goodness. Like I said, no Flowmaster today. He and the rest of the SIBO crew, I think, are, shall I put it, relaxing after their big 50th birthday party for SIBO last night. So happy 50th B-Day to SIBO. Doesn't seem like it was that long ago that I went to the 40th anniversary party and got that nice painting of the SPX, which hangs in our studio. So intriguing. Doesn't seem like that was 10 years ago, but clearly it was. So intriguing stuff. Congratulations to all of them as they're enjoying a little bit of relaxation after their big soiree. But you know what? No rest for the wicked here on the old odd block. Let's go out to our first name listeners. Let's go out to... Interesting. This is ARAV Inc. This is a newcomer. Ticker symbol ARAV. I had to make sure this was the right ticker at first, that they were spitting back at me, because the price and the strikes are kind of interesting. The stock, ARAV Inc. right now trading $1.68. So it's one of those, listeners. This is obviously a cheapy biotech. Just look at the name. They're trading about $1.15 a year ago. They got to their high recently, just on March 21st of $2.46. Now coming off almost $1 from that, down to about $1.69 right now. But what our Eye of Sauron found out there today, listeners, was like a 5,000 lot of the September 2.5 puts. Yes, I said the 2.5 puts. So pretty in the money puts here for a $1.69 stock. Somebody loading up on the 2.5 puts in September. They paid $1.35 for these bad boys when the stock was right about here, $1.70. So the stock hasn't really budged. So an intriguing way to get short, aggressively short here. Some ARAV. Obviously, they could have done this with stock, but I don't know, buying these types of meaty puts and then stock. 204 vol, by the way, if you are intrigued, listeners. Yeah, not exactly boding well for the future. But then again, if they are buying puts and stock, they could want this thing to rocket north. I don't know about buying that meaty of a put against stock on a cheap name like this. That's kind of a little bit of, as the Rock Lobster says, the old kissing your sister. Mr. Rock Lobster, sir, are you a fan of meaty puts on a $1.69 name, sir?
I can't believe you said kissing your sister on air.
That's your favorite saying, right? I'm just repeating you.
I'm like, oh my gosh, I can't. I was shocked. I was shocked. Anyway, but I think I think your observation is correct. This is like, okay, the stock is $1 and change, and then you're gonna go buy puts and stock on it. Like, I believe the phrase we have for a trade like this is, I love my broker.
Yeah, I
trade.
say somebody really is a big fan of his broker. Happy birthday, Mr. Broker. I'm going to do puts and stock.
How clever can you be? So yes, it's the stock is $1.69 and they're buying puts and stock. usually you do that kind of trade when you want to, you have a chance to actually sell the stock out and kind of go for the double dip ski. You got the puts in stock and the stock tanks, right? And then it kind of stops tanking. And then you take money on the puts and then look for the double dip on the way back up, right? That's kind of a standard put in stock, trade. And I like, where's the $1.60 stock dipping to? So I think it was hard to improve upon your first blush on this one.
Yeah, I don't like much about this one, quite frankly. So we'll keep an eye on it. But at this point, yeah, buy your $1.69 stock and just let the dice roll. You don't need the 2.5 strike put against it. Good times out here. This is a weird day, listeners. I haven't said this before. When so much of what our Eye of Sauron is spinning back to us is just endless Google. It's like it's choking on Google and Google today. It's crazy. And it's a lot of back and forth rolling of these May 113 puts expiring tomorrow. So a lot of near dated stuff going up for size. Obviously, when you got 1.5 million contracts combined in the two names, there's going to be a lot of that. So it's hard to make heads or tails of a lot of that stuff. Instead, let's keep on rolling. Let's go out to this one. Let's go out to Franchise Group. I do believe this is another newcomer on the odd block today. Weird day. It's a heavy day out there. Outside of the Googs, not a heck of a lot of our usual suspects lighting up the tape today, which is interesting. Franchise Group Inc., ticker symbol FRG. They own Vitamin Shop and looks like a few other things out there. Trading 29.25, off about a dime. Not a huge banger day for them. On the year ago was trading almost $36. They got up to their high of 44.25. Not quite June 8th, listeners. How about June 9th? That magical period, June 7th to 9th, is when all these stocks seem to have these tumultuous moments. Then they sold it off over the next few months, got to its low for the year of 22.5, right around September 29th. Then they tried to rally at 32.3 in February, then right back down to 22.75 on March 17th. And then since then, they've rallied it from 22.75 all the way up to 29.25 right now. So it's been a good couple of months out here for Franchise Group. And it seems like Mr. Rock Lobster, that maybe somebody is not buying what the market is selling to them. They're saying, this nice little run, we'll take it, but we're a little bit spooked looking out ahead. And so we're going to buy ourselves about 5,000 of the August 25 puts. So 4.25 out of the money, I should say, puts, listeners. They paid 35 cents. So lifting the offer, they were pretty much a nickel bid at 35 cents. So pretty wide. But then again, it is Franchise Group after all. It's a 32 vol if you are intrigued, listeners. The stock was pretty much right here at 29.30. Hasn't really budged that much since the trade went up. There are going to be earnings. The next earnings announcement is on August 3rd. So maybe that changes your mind a little bit. You're getting a little bit of earnings kind of spin of the wheel there during the lifespan of these options. You like these a little better as a result. 25 handle puts for 35 cents. It's not super expensive, obviously, but it's not nothing. And you got to have a nice little sell-off here. You got to have it happen, hopefully, before August 3rd for have any juice left in these puts. But intriguing stuff nonetheless. Mr. Rock Lobster, do you like folks apparently fading the near term here for your favorite name Franchise Group, sir?
I don't know. This was one that they look kind of expensive.
But yeah, I had the same thought. 35 cents for these, yeah.
So this was, but we have seen expensive options become more expensive before. What I find interesting on this one is the stock does not look like it ever wants to go below $25. I'm looking at a 2-year chart and it's dipped around to the 23s in the short term. And then that was it. So, I mean, they're paying up. Are they looking for protection there? I find it, well, let's just say interesting, on that score. So, I guess, right. Cause there definitely is a little bit more volume now. And I guess it's these puts cause it's a very, it just doesn't trade very much. I'm just looking at like there's a little bit more stock volume. I mean, the earnings are out. Yeah, we're like, the earnings came out already. So I don't know what kind of news they're thinking to get here. I mean, I can see. I think they're going to pick up the earnings cycle on this, but the stock just doesn't spend a lot of time going down there. Is my point. Like, I think it would be a hard one to make any bucks on, but I could be totally wrong. And they're the owner and operator of franchisable businesses. So Vitamin Shop, Pet Supplies, American Freight Buddies, and Sylvan, Lurving Vitamin Shop, blah, blah. So anyway, maybe they're looking at, hey, they're going to get like maybe a cash squeeze or like something like that. But it doesn't look like the business really is in jeopardy. But they pay a pretty hefty dividend. So again, a weird, and they've doubled the dividend in the last 2 years. The only thing I can think about is that, maybe this business, they're in danger of dropping their dividend, which is possible, right? So, yeah, it's hard to believe that they're paying out such a huge dividend right now. So I think that when I see something like this, I go, okay, they have a high dividend payout. Earnings have kind of been slacking lately. Could be because of rates going up, making their business more expensive or slowing down their rate. But, a divvy cut, right? Because right now they're paying, I think the yield on this stock is pretty crazy. It's like 8%. So I'm thinking something along those lines, expecting a dividend cut or something like that. So it might be worth keeping an eye on as kind of something that gets spanked if they change their dividend policy. So that's my observation on this one. Because the stock was as high as $55 at the beginning of 2023, which is pretty hard to believe, and they've taken 50% haircut out of it. So, I mean, it rallied on the divvy, and now somebody's buying some 23 puts. That's kind of like it really hasn't seen that level since like COVID. So
what is it? Charles Schwab taking half of it out this year? I mean, crazy times.
I know.
Is it like a fly-by-night name like that? I mean, crazy. A franchise group, stalwart name in the markets out there. All right, listeners, are you intrigued by these? Sounds like the Rock Lobster is intrigued by these. These are the franchise group AUG 25 puts for 35 cents. We have more, but we're kind of come up against. I want to make sure we get some of you folks and some of your thoughts here on the show as well. So let's get out right now into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, let's get into the old mail block. First, we were talking earlier about Apple flirting with that new all-time high out there. We asked you guys just a couple of months ago here on the network, listeners, when Apple was hanging out in the 140s range, kind of in the middle of that 52-week range, listeners. We said to you quite simply, what do you think Apple's going to hit first? Is 52-week low or is 52-week high? You folks all picked the 52-week low. So we thought we'd revisit that again. Just last week, we asked you, hey, Apple threatening new all-time highs. If you had to go out to the end of the year and buy a 10% out of the money put or 10% out of the money call, which way you going? Once again, our audience doubling down on the dark side. 68.3% of you saying you want to buy that 10% out of the money put. You say you want the fade to begin in Apple. Only 31.7% said you wanted to buy that call. You were in rally ho mode out there. So intriguing. Our audience has been fading Apple for a while. So far, it has not worked out. But, persistence can pay off at the end of the day. Let's get out to this week's questions. First, our somewhat silly but fun flash poll we just put up a few minutes ago. We asked you folks right now, CME Group, FedWatch pricing in about a 50% probability of a rate cut as early as July. Do you think that will happen? Yes, we want a rate cut in July, or no, that is insane. And right now, no, that's insane is running away with it. 83.3% of you saying no, that is completely insane. Only 16.7% of you say yes. So I'm glad to see there are some sane heads out there, in spite of what the Fed Watch is telling us out there. And then our actual question of the week, listeners, the important question of the week is, right now in these crazy, tumultuous, troubled times, listeners, a lot of people in our pro Q&As are asking about portfolio allocation, how they should be lining up, should they be going to cash, all this stuff. So we thought we would ask you folks, in these troubled times, where are you allocating the majority of your portfolio right now? Is it cash? Is it crypto? Is it equities? Is it commodities and fixed income? We had a bunch of write-ins, some people saying, why are commodities and fixed income together? There's only 4 choices in a Twitter poll, listeners. We can't put them all. We wanted to make sure crypto is out there because crypto is actually winning early on in this poll. So commodities and fixed income, they kind of drew the short straw this time. Some people writing in for where's the long ball, short ball, other things. Yeah, there's only 4 choices. Blame Twitter. Don't blame us. All right, but let's go out to Uncle Mike, sir. First off, what are your thoughts on our audience fading Apple last week and indeed fading this rate cut next month? They're saying pshaw to that, or I should say in July. And then B, more importantly, what do you think our audience is lining up? Where are they allocating the majority of their portfolio right now? Cash, crypto, equities, or commodities / fixed income?
Well, I would say in terms of fading Apple, I mean, it's typically not a good idea to bet against Apple historically. I would respectfully disagree on that one. In terms of where are they parking their cash right now, I'm going to say in money markets, because if you're concerned with markets, which it sounds like a lot of our audience members are, 4 to 4.5% along those lines in cash really is not a bad spot to be. So that's kind of what I'm seeing right now. Was there anything else in your barrage of questions, Mark?
Just the fact that our audience is fading the Fed rate cut coming up in July. They say, no way, that's insane.
Yeah, I would agree. No way, that is insane. I'd be shocked if we have a Fed rate cut in July.
Somebody's got to tell the Fed funds traders out there. Mr. Rockloff, the same questions for you. Are you surprised our audience is once again fading Apple? If you don't succeed, try again. B, that they are fading the hell out of this Fed rate cut in July. And then C, where do you think our audience is allocating their funds right now? Cash, crypto, equities, or commodities / fixed income?
I guess I kind of agree with TOSAW on the money market thing. So would that be what, fixed income?
That'd be cash.
That'd be cash. Okay. Yeah, I'm going to say I think people are going to cash, and I would say I'm fading the July rate cut, because then Powell looks like a dork, and he can't look like a dork twice. So.
Yeah, our super savvy options audience right now, 41.8% of them are in cash, the majority of their assets. So that is interesting. We've been talking a lot on our pro Q&As lately about the optionality of cash, how there is an inherent option baked into cash right now. You park it there for a while. As TOSAW points out, you are getting paid a decent amount. Obviously, inflation is eating into that, so something to bear in mind. But still, you are getting paid a decent rate on the money markets, and it does give you that optionality. So when a name you like maybe gets a little bit beat up or something else happens to trigger you, you can go right into that. You're not stuck riding the market up or down and all the tumultuous waves that are going on out there in the space. So interesting. Even our super savvy audience, nearly 42% of you in cash right now, 31.3% in equities, 17.9% in commodities or fixed income. And what was leading early on in the poll, now only 9% of you hanging out in crypto as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everyone, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on until the Monday episode of the old OB. Uncle Mike, we'll start with you again. First off, how excited are you that crypto has gone from first place to last place in our poll? Clearly, you have infected our audience. And then B, what are you keeping an eye on until the Monday show?
Hey, you know me. That's why they call me Crypto Bull Uncle Mike. So with that, in terms of what I'm watching for the Monday or keeping an eye on for the Monday show, I mean, my political radar is up again, like it hasn't been in a couple years. So just watching for any announcements or things like that. And just the 4100 level, the GIOVINAZZI magnet, seeing if we're going to stick to that or seeing if we're going to break away from that, because that's still a pretty decently powered magnet. So watching those two things.
Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on until the Monday episode?
Well, let's see if the market, if like, okay, we have this high contango. Is the market actually going to go anywhere? The Q's going to keep going up? And those are the answers that I have, or the questions that I have. And I think that's kind of it, because as far as and then I guess this debt ceiling thing, there's the Republicans in Congress made the reasonable request to freeze spending at ridiculous 2022 levels. And, I guess they're arguing about that. So, I don't know how much money, a group of 450 people, or actually in the Senate, that's 550 something people, can spend, but apparently quite a bit. So, and we seem to be hanging on every word.
There you go, listeners. That music means we've come to the end of another epic journey through the world of options. But before we go, let's go around the horn. Let's start where we just were. Let's start in the dark and stormy shores of Maine. Mr. Rock Lobster, I know you want people to put all their holdings into Chucky, Schwab, and Oatly. But aside from that, sir, if folks want to discuss those allocations with you a little bit, where should they go? What should they do?
Yes, I would avoid Oatly still, even though I'm seeing it in the wild now everywhere. Quite frankly,
it is starting to have some shelf presence, which is good. And I got to say, the freaking product, at least on the ice cream side, pretty freaking delicious. It's hooking me.
Well, that's high praise right there, anecdotal praise. So, go to optionpit.com or go to Money Map Press, where I run the weekly income cycles, or just about any product at Option Pit. Many of them I am involved in. So, again, 888-TRADE-01. Ask our customer care team. If you heard this show, you get 10% off anything. Look at that.
There you go. 10% off anything. Stay tuned for his forthcoming Charles Schwab and Oatly newsletter product coming soon.
Yes.
Which is just every week. Just buy more. Just buy more, all you can, and also buy the strawberry ice cream bars. They're pretty good. Mr. Uncle Mike, sir, do you have any forthcoming newsletters you want to be aware of? And where else should folks go if they want to keep up on the latest with all things Uncle Mike?
Well, you can follow me on Twitter. I try and put out all of my content on Twitter as often as I can, at Mike TOSAW, TOSAW. And you can also check out my website if you're looking for a financial advisor who is not afraid of the option product. And I guess the other thing I need to not be afraid of, based upon the Option Pit conference last week, I'm not afraid to talk about the taxes. So check out my website, stcharleswealth.com. Book an appointment with me. Would love to talk with you.
Remember, pay your taxes. IRS is watching you from the desk of one Uncle Mike. Give him a follow at Mike TOSAW on Twitter is the place to go to learn more. We got to get on out of here. Back in a little bit for all you pro folks with all things TWIFO. Maybe we'll get into a little bit of that Fed Watch fun. I'll be joined by our buddy, Mr. Rich Excel. He always has a lot of great research and studies and a few intriguing trade ideas he's cooking up across the broad spectrum of futures options over there at sea. Maybe it's in the ags this week, maybe the equities, maybe the energy. You never know. We got to tune into the show this week to find out. That's coming up live for you folks in a little bit, on demand for all you on-demand folks. Back again tomorrow, Volatility Views, noon Central, 1 p.m. Eastern. After that, of course, for Options Oddities for all you pro cats. And then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by SIBO. When it comes to trading volatility, trust SIBO, the creator of the VIX Index, for in-depth and relevant information. SIBO's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.